In this video, we're going to be talking about the new $400 a week unemployment extension. We're also going to be talking about the $1,200 stimulus check and also a new loan modification law that you need to be aware of. So we have a lot to cover in a very short video. Stay tuned. What's up, everybody? Rinde from Ask Rinde, the #1 community for foreclosure, income, and credit. So new news regarding the second stimulus package update. Republicans recently approved the $1,200 stimulus checks to Americans. Now, some people are calling this the CARES Act 2 because it's very similar to the first CARES Act in that it actually is calling for $1,200 per individual up to $75,000. But there's still a lot of loose ends because it doesn't factor in, and we don't know what they're going to be offering for dependents. So as we know in the first CARES Act, you were getting $500 per dependent, and also it didn't cover adults that were actually still adult children, so to speak, that were still living at home or that were actually claimed as dependents by their parents. In addition to that, there's no provision for the $600 unemployment benefit extension that we have actually all been looking for, that a lot of Americans and people are depending on. As we know right now, there's 31.8 million people that are actually in unemployment. And as of this video, the eviction moratorium that was in place for the last 4 months expired yesterday, Friday, the 24th. And also tomorrow, the July 26th, is when the $600 unemployment benefit also expires. Technically, many people said it expired yesterday because tomorrow is a weekend, it's not an actual business day. So there's a lot of speculation as to what will be included in the second stimulus package, whether they're going to offer the same language, $1,200 per individual, $2,400 per married couple, or $500 per dependent, or they may raise that up to either $700 or $1,200 per dependent. We're waiting to see. These are the loose ends that we're talking about. But most importantly, outside of the actual one-time check that they're going to be given, many people are looking to find out what's going to happen with the weekly benefit that comes on top of their regular unemployment benefit. Because to be honest with you, this is what has been keeping America afloat. This is what's been keeping things from like the dam basically breaking. Many people have actually been in this position where they've been getting this their unemployment, and they've been getting this money on top of it that's kept them going and really kept them from losing their minds and all hell breaking loose. Now, Republicans are saying that they don't really want to continue that because they feel like it's too generous for people who actually were making lower income. So in essence, what they're saying in essence is that the $600 have been empowering people to stay home. The $600 has been really making it easy for people to not have to go out and work, and they want to infuse the economy and force people back to the workforce by taking that away. So the main focus for most people has been that unemployment boost and that additional money that comes in weekly, because it really truly puts them closer to where they actually have some semblance of normalcy. Now, keep this in mind. We have the eviction moratorium expired yesterday, so we're really going to see the truth of the impact of the coronavirus on the economy starting now. This is the real turning point here, where we're going to see a combination of eviction filings go through the roof. Millions of people are going to be evicted, and where they're going to go? They're going to be homeless. At the same time, we're waiting for these people to actually come up with a concise plan as to what will happen with the second stimulus package. Most unemployment is so little that really you're just covering groceries and that's it for the week. You spent the money specifically based on your household type, your household size, your cost of living. They vary state to state. So people are really in a big issue, in a real big bind if this is not, and this provision is not made. So we're looking to see if this second stimulus package is going to actually have provisions for it. Steve Munich has actually recently floated the idea of perhaps maybe whether or not Republicans will allow the additional $600 a week to continue and get extended further. But many people don't think that that's going to happen. So there's been talks of whether or not they will actually go to $100, $200, or an additional $400 per week on top of your unemployment to be able to carry Americans through. Now, the other variable has been maybe considering or proposing a 70% wage replacement that will actually be based on your last employment. They would actually then give you an additional they would give you 70% wage replacement on top of your unemployment to be able to supplement what you're getting. So there's a possibility that the 70% wage replacement is equal to or around about $400 a week on top of the unemployment that most Americans are already getting. So we'll have to actually wait and see when this all becomes reality. Stay tuned while I give you an update once I get more, and once they come out with what their final proposal is going to be, we'll give you an update here. Now, there's also a lot of concern regarding forbearances and whether or not you can get a forbearance or whether or not you should get a forbearance. A lot of videos floating around discussing and talking about the dangers of forbearance, the pros and the cons. You know, when the crisis first started, there were people who actually lost their jobs and they were furloughed. But then there are people as recently as yesterday that were furloughed. So this is still ongoing. We also have a situation where there are states that have a resurgence or, are now experiencing the coronavirus for the first time. You know, I'm in New Jersey, as you all know, I'm a real estate agent here in New Jersey, and we actually took a hard hit in the beginning, New York and New Jersey. We still have a threat that's here, and we are expecting a second wave. So when you look at that, forbearance becomes very, very important, because what happens in this situation where you actually go and agree to continue to make your mortgage payments, you either lose your job or you can't find a job or you're not working currently. How can you actually make the payment? How can you actually move forward? It doesn't make sense. This whole thing is a bubble. So what has to happen with the forbearance is that you need to actually reach out to your servicer, and number one, you need to find out what type of loan you have. If you have a federally backed loan or a federal loan, then that's one thing. If you have an actual conventional loan that's not federally backed, that's another thing. Now, one thing is, it's important to know that in times like these, servicers are either going to cooperate with you or they're going to try to take advantage of you. It's important for you to know your rights and know what you're doing. So when you're dealing with them, you're actually dealing in a way that's advantageous towards you. So many people have been reaching out to me and letting me know that their servicers are rejecting them from actually either getting a forbearance extension or not trying to give them a forbearance at all. And I'm going to say this to you: if you have a federally backed loan, all you have to do is call your mortgage servicer and tell them attestation of hardship. Those 3 words. That's all you need to say. You don't need to fill out any paperwork. You don't need to send in anything, because the attestation of hardship is actually a requirement by the CARES Act. It's a provision in there that actually mandates the servicer to allow you to have a forbearance up to 12 months. First 180 days and then another 180 days, equaling 360 days. That's your entitlement if you have a federally backed loan. Those are loans that are Fannie Mae, Freddie Mac, these loans that are federally backed. Some servicers who actually have federally backed loans are actually playing games with people and asking them to send in loss mitigation packages, asking them to fill out paperwork, send in bank statements and all that, as you can see here. And it's wrong. They're not supposed to be doing that, because the fact is that the attestation of hardship clearly says all you have to do is actually just make the attestation of hardship with them, and then that's it. You don't have to send in any paperwork. You're not due to actually required to send in any documentation to support your claim of the fact that you're going through a hardship. We're dealing with a national outrage of a virus that's ravaged the economy and also people's lives. And so if you're going through that and you've been adversely affected directly or indirectly, and you actually propose or let them know and you attest to that fact, that's all you need to be able to get your mortgage and actually forbearance put in place for up to 360 days. So that's something that you need to be aware of, that right that you have. And if you're going through a situation where you're dealing with a servicer that's trying to actually skirt that law, you can reach out to us at AskRindeNetwork@gmail.com. We'll be able to help you with that. Now, the issue that's happening is that there are people who have conventional loans. And when you have a conventional loan, the story is completely different, because your loan is not federally backed. So in that case, you're actually dealing with the servicer one-on-one. And it's the servicer's internal policies or their, their proposed, provisions that they will allow to be able to give you either a forbearance or a forbearance extension. There's no oversight on their policy from the federal level. So in that case, it's going to be the servicer and the investor behind the servicer making the determination whether or not, okay, based on the climate and the environment, what they're seeing, based on the state that you live in, whether or not they're going to give you a forbearance or they're going to give you a forbearance extension. You need to know how to negotiate with that. So the servicers generally have the funds to be able to cover your mortgage payments up to 4 months. But now what's happening is that forbearances are going past that because of the climate and the environment and the crisis that we're in. And so what is going to happen is that it's going to be a trickle effect. The forbearance, the mortgage servicers don't want to do the forbearances. They're being forced to do it because they know that people can't pay, and there's been a freeze on moratorium on not only evictions but also foreclosures. So they couldn't do anything. But the issue is that they have to actually continue to make payments. So for example, when it comes to your escrow account, people have to actually pay your taxes. They have to pay the insurance. Those things have to be paid, and they get that money out of your monthly mortgage payment, and they pay those municipalities. if they don't pay the municipalities, then what ends up happening is that you start having being in a position where there's a tax lien can be put on your property. Then also other things can happen where your insurance drops off. So most times lenders want to remain in first position, and what that means is that the lenders wants to make sure that there's no encumbrance and no one in front of them or in line when it comes to needing to foreclose on you. So they're not going to allow the taxes to lapse. They may allow the insurance to lapse, but they're not going to allow the taxes to lapse, because if the tax lapse and there's a lien or an encumbrance put against your property, that tax will actually hold first position on the property because it's a government lien that's against the property. So they want to make sure that they pay the taxes. You want to make sure that right now during this time you're calling your insurance company, and if you're in a forbearance, to make sure that your insurance is getting paid, because some lenders and some services won't pay the insurance. And what happens basically is, you need to have insurance on your property to be able to make sure that for anything that happens regarding damages, etc., someone falls on your sidewalk, all that stuff, you're covered, and those things are there. So you want to make sure that the insurance is covered, but the other thing, as far as the tax, they make sure that they pay that. So I've said many times on my channel that they're not only going to have to take the arrearages and put it in the back of the loan, but now there's going to be a need for a real true solution, because the virus and the effects of it is going on longer. So no longer can someone realistically go and say, well, yeah, I'll start paying my mortgage payment again, when you don't have a job. You don't know if your state is going to be closing again. There's a lot of variables that we're in this place that there's no determination of what's to happen. So yes, if you need it, you need to be able to discuss with your mortgage servicer the ability to get a mortgage forbearance put in place for up to 12 months or 1 year. Because what we're seeing with everything going on, there's still a lot of problems that are happening from different angles, and there's no one track solution. And so until that happens, they're going to have to hold off on requiring mortgage payments, because the household makeups, there are people who have either passed from the coronavirus. Right now we're over 142,000, or there are people who can't go back to work because they're stuck. They have to watch their children. And then at the same time, there are people who have to work, but they can't send their children to daycares because they don't know if they're going to catch the coronavirus there. There's so many different variables. So that's what we're going to be sharing with you all, how to actually go about getting a 12-month mortgage forbearance, whether you're in a conventional mortgage or whether or not you're in a federal back mortgage. You need to make sure that you ask for it up to 12 months if you need it to be able to get your mortgage put off. So that leads me to my next and final point regarding loan modification. So I've been talking to our attorneys in our network all across the country, and everyone with a resounding voice has the same opinion, that there needs to be something done regarding loan modifications. So there's a new loan modification law that's being proposed and that may be passed, and we're waiting to see the details of it, but it's supposedly or may be similar to HAMP. There's some sort of program that they're trying to put in place to be able to help because of the tsunami that's currently waiting. There were people that were in pre-foreclosure. We have a list of dozens of people that were in pre-foreclosure, clients of ours that have been in pre-foreclosure before the pandemic started. And we have dozens now of people who are actually currently trying to figure out what's going to happen because they don't have money. They already have, some of them have been in this forbearance, but their forbearances are expiring. So they don't know what's going to happen. They don't know how they're going to make the payment when the lender says, yes, okay, your forbearance period is over. Go ahead and either pay us all the monies that you owe, or we'll take the money, sure, we'll put it on the back end of the loan. If we're Fannie Mae, what we may do is create a second mortgage, a second lien, and then put it on the property. But whatever would they work out, the fact is that the time now resumes. And so if you're not in the position to make the payment, how are you going to do that? So that's where there's a need for a loan modification for some people who will not only help them reset, but also help them with their interest rate, because there are people who are in interest rates that have 5%, 6%. All these interest rates have now that are not beneficial to them, and if they can have that reset, they're in a better position where they're currently at the interest rates that we are in now, which is helpful to them from the mortgage side and the monthly payment side. Everything is about monthly payment and affordability right now in the climate that we're in. So we know that with federally backed mortgages, it's not so much a concern right now with loan modifications, although some people were actually at the point of share sale when the pandemic started, and they actually have used up their extensions. They've used up everything that they had, and they're on the cusp of either filing a bankruptcy, a Chapter 13, or trying to figure out how they can save the property. And so in those cases, those things are different. What we're dealing with is people who are having conventional mortgages that have to do a loan modification. They don't have a choice because that's what the option has they've been left with. So in this situation where your lender, you go to your lender and they don't want to do a loan modification, or they're not cooperative, or they're not giving you terms that are even anywhere near favorably, then what you need to do is you need to be prepared of how to actually deal with them. Not only to be able to ensure and make sure and guarantee that you get a loan modification or you get your loan revised short term, but also long term. And so there's been a lot of concern about this. I've gotten a lot of contact from many people all across the country that are trying to see how they can work out and get loan modifications now because they're worried and concerned that they're going to lose their properties. So we definitely have a solution that we've created for you to be able to help you, guarantee you get your loan revised short term and also long term. So in this time when you're reaching out to your servicer and they're not cooperating, that's where creative real estate comes in. And that's where you need to know what they call foreclosure hacks, or what I've been talking about, how to hack foreclosure, how to get around it. And that's where we show you how to actually now not only get a loan modification, but solve your issue short term and also long term. Have a plan in place to be able to deal with it. So we're waiting to see what this new law will entail. We're waiting to see what the provisions that will be in there to be able to help homeowners deal with their mortgages, deal with modifying their loans and getting them in a position of safety, so to speak. So I actually have now created a 30-day foreclosure challenge, and I want you to start the 30-day foreclosure challenge today because I've included information in there how to actually adjust and get your loan modified short term and long term. I'll give you the beginnings of how to do that. When you've hit a brick wall every single time with your servicer, you need to know how to get around that. So until the new law takes effect, which we don't know what it's going to be and what the benefits is going to be, and also looking at what's going on with unemployment, you need to be able to be responsible for your own future, and you need to take the reins for yourself on how to not only deal with avoiding foreclosure, but also moving your income forward, and moving your income forward in a way that's going to be beneficial to your family. So factoring in dealing with the income, factoring in dealing with the foreclosure, and then also later on factoring dealing and fixing your credit, I created the 30-day foreclosure challenge that you can actually start, and this actually includes everything on how to actually begin the process of dealing with foreclosure from day 1 to day 30. So you actually have a plan, a step-by-step plan on a daily basis of how to deal with this current climate, the current situation that you're in, where you're dealing with the potential of losing your home, the potential of not having income, having to stay home with your children to be able to take care of them now that you can't go out to work because you can't have pay a babysitter, and you can't risk your children being exposed to a babysitter. All those factors we actually have included in the 30-day foreclosure challenge to help you not only deal with getting income from home, working from home, but also dealing with the foreclosure and avoiding foreclosure, how to deal with your servicer, what to do, what to ask for, how to actually create, put yourself in a position where you let them know your rights, and also forms, free forms that are included to be able to help you send to the servicer to navigate you forward. I've also included another link in the description box below that is actually specifically for grants and free money for individuals. As we know, things are drying up all around, and you need to know where to be able to get access to money and grants. Just like how the unemployment benefits are expiring, you need to know how to actually replace that with free money and grants. So I've included that link below. Click the link in the description below, and I look forward to getting your opinions on everything regarding the unemployment benefits. Should they be extended, the $600 be extended? What do you think about forbearances? And also, what do you think about loan modifications? Do you need one? Do you know anyone that needs one? Do you think that it's a good idea to get a loan modification currently? Do you think it's beneficial or is not? So let me know what you think in the comment section below. I look forward to seeing you guys on the next video. Until next time, thank you so much for watching.